Hi, my name is Andrew Unknown, and I'm a mortgage agent with Rock Capital Investments here in Ontario, Canada. Now, this is the first in a video series that I'm going to be doing focusing on the major aspects of the mortgage industry for everybody's knowledge. This is for realtors who are helping out your clients, for people looking to get their own mortgage for personal reasons, and for any new agents looking to join the business or people looking to be interested in the mortgage industry as a career. Now, the first aspect that we're going to focus on today is the down payment. The down payment is one of the most crucial aspects of purchasing a home and especially the mortgage financing side of it. Now, the first part of the down payment that we're going to focus on is the most common question that I get asked almost on a daily basis, if certainly a weekly basis, if not a daily basis, is what's the minimum you can put down for a home? Now, the way that it works here in Ontario, and if you're a realtor, I'm sure you already know this, is that for the first $500,000, you can put 5% down. That means if the home is $500,000 or less in terms of value, you can put 5% of the value down in terms of your down payment. And if the home is if the home value is greater than $500,000, you have to put more down. So between 500,000 and $1 million, it is 10% down, and anything over that is 20% in order for mortgage financing. For example, if your home is $800,000, your down payment would have to be $55,000 because it's 5% on the first $500,000 of the home, which is $25,000, and then 10% on the next $300,000 from 500 to 800,000, which is 30,000, getting, a nice round number of 55,000. Now, the next thing that I get asked is where's the down payment coming from? Does it matter where the down payment comes from? And in some cases, no, but in most cases, yes. When I say when it matters, we just want to know where it's coming from. As in, when you're doing the mortgage financing, if you're working with a financial institution, whether it be a bank or a credit union or some other form of uh, mortgage lender, they're going to want to see a history of where the down payment is coming from. If it's coming from a savings account, or if it's coming from investments, or if it's coming from the purchase of or the sale of a new home to purchase, or your old home to purchase the new home, that's important as well. Now, the easiest one is if your down payment is coming from the sale of the old home to purchase the new one, because obviously the proceeds from your down payment will come directly from that, so it's relatively easy to track. If your down payment is coming from a savings account, for example, say you have like a tax-free advantage savings account with $55,000 in it for that $800,000 home, don't touch it. The best advice I have is don't touch it. Just leave it in that account, and we need to see a 3 month history of the down payment, right? You need to see a 3 month history of it to make sure that, okay, yeah, this is what the money's for, and you didn't just receive a whole bunch of money just for the purposes of buying a home. Because again, they like to see that 3 month history. Your lenders will like to see the 3 month history. If your money is coming from investments, they'll need to see a 3 month history in terms of your investment account, but you can leave the money in for the investment and gain 3 months of the investment interest. So don't pull it out until you're ready to close, but they want to see at least a 3 month history on where the investment is where the income is and where it was and where it's coming from. Uh, yeah, so that's the most important aspects of the down payment in terms of your personal finances. Now, if your down payment for your home is coming from a previous mortgage or a line of credit that was borrowed against another property, or is a gift letter in most cases. This gifted down payment, you'll need a gift letter. If it's a gifted down payment, which does happen, or at least part of the down payment is gifted. For example, say it was again that $55,000 down payment, and you had 30,000 of it saved, and you needed that extra 25,000, but your, say, a family member or a friend was able to lend you that extra $25,000. um, they would need a gift letter stating that yes, this is a gift that we are giving the borrower, person purchasing the home, for the purpose of purchasing the home. You'd have to get it signed by a lawyer. It is doable. It is totally 100% allowed. It just needs to be, you know, um, documented. Documentation is key with gift letters, and your documentation needs to be specific as well. It needs to say that this is a gift, because otherwise they will have to include it in your debt servicing ratios, which we will touch on in another video. Anyway, so that is everything that you need to know about the down payment for purchasing a home here in Ontario, Canada. And if you have any questions, please feel free to comment under the video if you're watching it on the YouTube channel, A.R. Known Mortgages, or, if you're a realtor that I've sent this to, please, just respond to the email or call me with the number. Anyway, thank you very much for watching. Please like and subscribe if you haven't done so already, and I hope you have a fantastic day.